Hi, welcome to Forex In Four. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Friday, June 24th, 2011. This morning I'm talking about what a wild ride. And if you look at the currency markets yesterday, and actually just global markets in general, a lot of craziness going on yesterday, a lot of volatility, some just tremendous moves yesterday, a lot of opportunity, but there was also a lot of risk out there. And I'm just going to give a quick rundown of what basically happened yesterday, and then we'll talk about what's going on today. But essentially what happened is earlier in the morning, we had coming off the previous day's FOMC meeting, we had dollar strength, which is pushing euro lower. All right, we still had concerns about what was going on in Greece. Then early in the morning, all right, the EIA announced that the U.S. was basically going to start releasing oil from its strategic reserve to try and combat the price. Well, that sent oil markets flying lower. Okay, oil prices were down about at one point I think $5 to trading around a 90 handle. All right, and then all of a sudden that took the correlations down as well. So we had, when we got oil prices going down, and then we had dollar strengthening. So we had euros selling off. It was continued. All right, and let's go just take a look here on the 30-minute chart to just sort of follow the timeline. Okay, so you can see here euros selling off. Okay, on this news based on the correlation, dollar strength. All right, and then all of a sudden, it started coming back, bouncing a little bit once we get to some support areas. And then later in the afternoon, we had the news that Greece apparently has agreed to a 5-year austerity plan, which is going to allow them to receive the next tranche of payments from the ECB, IMF, etc. So, boom, that all of a sudden strengthened the euro, and we just got a pretty big reversal. So you can see here, essentially, what looks like just a V bottom here on the 30-minute chart taking place. So that's kind of, the big news that happened. Obviously, this is what's been dominating the markets recently. But I want to go back to the oil thing for a second. And, it's really, really sad that we have to take these stopgap measures to, get prices at the gas pump to go lower. All right, and we have absolutely no energy policy in this country. All right, we're taking oil, which is basically adding supply to the market to try and drive prices down from our strategic reserve. All right, so what happens if there's like an emergency? Well, all of a sudden now we have to go back into the market and buy more oil. All right, that's going to drive the price right back up. So we've got this, back and forth going on, and the bottom line is that the strategic reserve is for emergency, okay, and it's not to manipulate prices, and it's unfortunate that's what's taking place. Listen, I'm fine with having lower gas prices, I really am, but it's kind of like raiding your emergency slush fund, to go on vacation, and then all of a sudden you come back and all of a sudden something happens, you need the slush fund and it's no longer there. It doesn't make sense. I mean, let's face it, we've got a lot of problems in this country that could be solved by taking these capricious actions. All right, we could go to Fort Knox and say, hey, let's just sell all the gold in Fort Knox. That'll raise a lot of money. We can pay back our debts, and everybody's fine. But then guess what? We don't have any more gold. So it's one of these things where you need to put policy in place, and whether that means actually having higher interest rates, all right, and a stronger dollar to combat the price of commodities, or if we just expand supply more. Okay, you talk about the potential for supply. I mean, people don't realize this. I was just listening to the news this morning, but they've got this oil shale up in North Dakota here in the U.S. that they're starting to explore, and they're starting to develop. Right? And North Dakota as a state's got 3% unemployment. All right, think about that for a moment. What's the problem here in this country? Unemployment. All right, we start developing our oil sources. All right, boom, more supply in the market, lower prices. Okay, start developing supply, more people back to work. All right, what's the problem with this? Well, I understand there's environmental concerns. You know what? The last time a refinery was built here in the U.S., I think it was in the 1970s. All right, and that's, obviously technology's improved a little bit since then. But trust me, I am all for the environment. All right, but sometimes you got to use your head and take common sense solutions. All right, stopgap measures like just adding some supply to the market aren't going to help. So anyway, we've got this whole Greece thing happening, which looks like it's going to be pretty good. basically the market is now back in risk-taking mode, although the euro's trading down just a little bit lower. Okay, they still actually have to vote on the austerity measures. Okay, that's going to be next Tuesday, I believe. So it looks like it's a done deal, but you never know until that last moment is eclipsed. So we got Aussie higher. Okay, we've got Kiwi higher. You can see dollar is weakening here, although it's a little bit stronger versus the loonie, and that has to do with that oil trade. And yesterday I was talking about the loonie, and I was shocked in the morning. I was like, oil prices had already been down before this strategic petroleum release was announced. And I was like, gosh, I wonder why loonie isn't down much further. And then all of a sudden the news hit the tape, and boom, the thing took off and started flying. So that was definitely a trade that I missed there. So, we still got some, this Greek debt deal looming over our heads, and it's going to be there till later next week. All right, we've got later this morning U.S. durable goods orders, which are expected at 1.5%. All right, we're going to see how that happens. Not sure exactly what the deal is going to be there, but that's basically the big news for the day. But if you take some of the risk out of the market due to the Eurozone potentially, having a fix to this Greek crisis, then it looks like we may be back to game on despite the weakening economic data. So that's what I'm looking at today, folks. Watch out for the volatility. You're never just certain what's going to happen. And yesterday was a perfect example of that. So good trading to all, and have a good weekend.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.